Now we can turn to, let's just start with what's happening on the demand side. And here's one when we're looking at South Korea in terms of just the mobility that has really been pressured as we've seen COVID start to increase, specifically in South Korea. And again, it's not that it's going to lead to mass shutdowns or an increase in deaths or anything really terrible. It's just a matter of people are going to change the way they consume, the way they travel, the way they do things on a daily basis, which is something that we've continued to see now again in Europe and in India in terms of just the consumption levels, which are going to continue to weigh not only on oil, but also that refined product price. And this is something where, things have started to bottom out, things have kind of flatlined at this level, specifically in South Korea, which again is going to be a problem as we look at ways to offload a significant amount of this oil that's sitting in Asian floating storage, because we have essentially a maxed out onshore storage, which means that there's going to be this friction as how do you clear that crude? Do you resell it back into the market? Are your refiners going to be able to operate at elevated levels to try to clear some of the glut? And these are issues that we're going to look at throughout the remainder of the segment. And that's when we start to look at what's happening onshore at China's Shandong. And you can see that there was a little bit of a decline back down to essentially all-time highs on a seasonal adjusted level. And again, it's just going to be kind of going back and forth as to where is the demand, where there are things happening. And we did see a decent decrease in diesel exports, gasoline exports, when we look back over the course of June and July. But it's important to appreciate what's going to happen in August. And here you can see diesel exports declined 49% month over month. Gasoline exports were up 43% month over month. It's the highest since April. So we saw diesel decline, gasoline increase, but then we saw diesel output increase 3.9% month over month, and gasoline production increase. And again, like seeing diesel and gasoline production increase isn't crazy when you consider where things have been operating and the desire to move some of this through. The problem is China has not renewed a lot of these import allotments. So in China, it's very important to understand that you get a import license and then you get an export license. So you're allowed to import a set amount, you're allowed to export a set amount, and that has to get renewed on either a monthly, quarterly, 6-month level, depending on who you are and your relationships within the regime. So it's important to understand that they have not seen, especially on the Shandong independent refiners, they have not seen that increase in import allotments, which is going to weigh on kind of what are they able to do. And you're going to start to see some of this whittle down, which will be a positive. But again, it's a matter of weighing both sides because they're also sitting on a record amount of refined product. And without a clear export movement, it's going to be a problem to kind of get that into the market. So now when we just look at what has happened over time, it's important to appreciate the year-to-date number. So when we look at apparent oil demand, when we look at it year over year, it's up about 2.5%, which should be a positive when you consider where we started the year, given the COVID backdrop. Now, the problem here that we have is that it's starting to go in the wrong direction, and it's going in the wrong direction because you're starting to see some saturation in the market. You're starting to see some of these slowdowns, which is an inherent problem as to where things are going. So when we look at oil products export volumes, you can see in July, gasoline had a big increase of about it was about 1.12 million tons. Diesel slowed down, but again, the export volumes on a year-over-year basis is very important. And the import volumes continue to kind of be lackluster if you consider where they sit and how they need to move through their own product. And again, this all comes back down to just inherent slowdowns in the way that they're going to try to manage their consumption. And when we consider kind of the diesel flows, because diesel, I think, is an important indicator as to, when we talk about how Singapore remains at near all-time highs, when we look at floating storage of product, here you can see on an August level, August is back to essentially where we were in March and April on an export level. So refiners are being forced to reduce runs, specifically in China. Just when we look at the supply chain, because Chinese gasoline and diesel stockpiles rose to a record amount of 59.7 million tons in July. Now, the fill rate was about 75%. So the reason why that's important is the safe fill rate is considered 80 to 85%. So they're getting really close to what would be deemed quote unquote tank tops. Now, everyone likes to talk about them. They probably won't get hit. It's, you can export, you can give discounts, you can do things to alleviate some of that pressure. But again, by alleviating that pressure, you're going to increase your exports, you're going to push things into the market. And this is going to put inherent pressure on the global supply chain of refined products, which again is going to just increase pressure on an already razor thin, if not negative margin for these global refiners, especially as they face additional demand losses, with Europe being one of the key ones in terms of where that demand has come under additional pressure. So then when we look through, okay, well, what can happen with China? So when we look at what's happened week over week, there hasn't been much change in terms of where the state-owned refiners are. They're still operating at about 72 to 75%. The Shandong are refiners, that the independents are still at about 75%. The pressure is going to come is when they start to really slow down, which we've been expecting, but it hasn't really materialized. And the question is always going to be, well, why hasn't it materialized? Well, now we know that there is a maximum amount, or they're reaching a maximum amount of refined product in storage, which is going to force them, whether they want to or not, to really reduce those runs, especially given the export quotas that are still haven't really been issued for some of these locations, which is going to put additional pressure. So now that we look at that, let's shift to India and South Korea. So India and South Korea increased diesel exports in August after the coronavirus. Again, it hurt their local demand. So when we consider what's happening, so now we have China, which is going to increase exports. They're back to March, April levels. But at the same time, we have diesel exports from India increasing 37% month over month. And we have shipments, which again, month over month is one thing, but it's also 36% higher year over year. So, and most of these exports, as we've talked about, are going to, some of them are going to Europe, but they're also going to Africa and Asia. Now, when we consider why that's important, a lot of European product goes to Africa. So if a lot of this Indian product, Chinese product, Middle Eastern product is heading to Africa, that's going to also create an issue where, again, coming back to these sticky refined product levels without the appropriate demand to kind of clear this glut, leading to additional pressure in the oil physical market, as well as what should be in the paper market. And just to kind of round it out, South Korean shipments rose 22% speaking diesel, South Korean shipments rose 22% month over month, but more importantly, 19% year over year. Again, speaking to the problems within these countries. And the reason why we're focusing so much on Asia in general is because the bullishness around oil really surrounded, well, Asia is coming back, they're going to buy everything. It's like, well, no, and this is why. And these are data points that we continue to harp on to try to show, look, there's going to be pressure. There remains pressure in the market, and this clearing of the glut is going to be very difficult given the fact that India, China, South Korea, Asia in general remains saturated with not only oil, but product. And that comes to, let's go a little bit deeper now and speak about India. And here you can see a chart looking at diesel sales and overall petroleum product sales, and they continue to come down after that strong rally. And that's really coming from just pressure with the increase in COVID. Now, again, we're not going to get a lockdown. We're getting some sporadic issues and sporadic lockdowns, but the consumer's inherently going to change their spending patterns. And that's resulting in about 50% of trucks being set aside. And we've already seen two refiners that are operating at 74 to 83%. But as early as May, they were at 95%. So here, these are the demand issues that we keep talking about, because the refiners buy oil and they're not buying oil, or they're buying a lot less than expected due to the headwinds. And then the ones when we consider, okay, well, there's specific refiners that have a bigger export market. And when we look at what has happened in July, it's operating at 50%. So again, these are issues in terms of just the inherent oil demand that's coming in. And when we look on a broader level, some of the expectations is now that the oil product consumption is actually going to move lower in India, especially for fiscal year 2021, which we've already seen come in very soft. So we're actually going to see oil product demand drop to the lowest level in 5 years. And again, coming full circle, demand. You need demand to move oil. So diesel sales in India, at three of the biggest fuel retailers fell 12% in August, and gasoline rose. But again, gasoline rose, but it was still down 8% year over year. So these are some of those issues that we continue to see, because the sale of diesel, even though it fell 12% month over month, it's still down 22% year over year. And there's just given the headwinds that we're going to talk about in a second, those are going to continue to remain weak and is going to keep pressure in the global market. And that's when we look at the India high frequency data points, as you see COVID cases get worse, as you see new active cases remain a problem, the lockdown index is relatively flat at about 80, 79.6, which is, we had this chart in our econ show. These are things that are going to continue to weigh on just total consumption of oil and oil products. And India was supposed to be that bright spot that just isn't materializing in any real way. Looking at India industrial production, which remains well off of where they should be on a seasonal level, but also just how far away they are from the inherent levels that they should be, which is, again, why we believe that the market is still overstating Indian GDP, why Chinese GDP remains overstated, but additional pressures are going to remain. Next time we'll talk more about Europe, Africa, and the US, but I just wanted to show kind of where some of these problems exist in Asia itself. And so when we consider about India, about 40% of all oil consumption is diesel. So when we talk about diesel and how much further diesel has declined versus gasoline, it's a bigger share of just the oil demand bucket, which is why it's so important. And that's where we continue to see a lot of these things sit on the sidelines. And that's where we look at, okay, well, it's going to be hard to see, because we talk about in the EIA show how the US remains at record levels, how Europe is relatively, depending on the product, can be at highs or within an average. Singapore remains a problem. Fujairah remains a problem. Japan. It's going to be very difficult to clear this glut, especially as we do have new oil hitting the market, not only in OPEC plus and in terms of meeting the agreement, but also in non-OPEC areas, which is why we think there's going to be a continuation of problems. So now in our next, we're going to do a quick special update looking at India and China and the issues that they're facing in terms of this, renewed issues between Ladakh in Bhutan, and really what does that adjustment mean as both countries position for the winter season, because typically a lot of fighting will happen within the spring thaw and throughout the summer. So the question is, how are guys going to dig in, or are they going to make bigger moves ahead of the Himalaya winters? So those are things that we're going to talk about in a few moments to really look at this special update. So then after that, we're going to follow up with our primary vision Frac Spread Count, which is obviously our favorite. It'll be a little bit shorter, let everyone get to the weekend. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.